Okay, everyone. Thank you very much for coming today. The topic of today's webinar is Russia-Ukraine, the long-term consequences and the investment implications that no one else seems to be thinking about. So I'm here with Jacob Shapiro, the Director of Geopolitical Analysis for Cognitive Investments. I'm Rob Larity. I'm the founder and CIO of Cognitive. And today, at the end of this presentation, you're going to hear us talk about these five seemingly paradoxical investment opportunities and why we think all of them could be interesting and what we're doing with relation to each of them. So, Jacob, why don't you start off by giving us the background on the geopolitical side of things?
Thanks, Rob, and nice to see all of you. Already see some friendly names in the attendees list. That's cool. We'll get to questions eventually. So I'm going to start by being pedantic and with a quote from Plato's Apology, because this is the first thing I always do when I'm dealing with anything that I'm trying to sort of recheck myself on. The summary of this quote is basically that the beginning of knowledge is that you know nothing, or that you recognize that you know nothing. I often get asked how I got into geopolitics, and it's not like I studied geopolitics at university or anything like that. I grew up around a professor of philosophy who was my dad and spent a lot of time thinking about philosophy and thinking about thinking. And in some ways, that's the most important part of this, because you have to be able to move your mind around and think about things from different perspectives, which is what we're trying to do here. So we are basically trying to start from scratch. We call this in the analytical community blue sky thinking. So drop all of your preconceived notions at the door. We have no use for them here. We are literally going to start from the ground up and see what we know, what we think we know, and interrogate all of our assumptions. And then hopefully we'll end up with a little more knowledge than when we started this whole exercise. And since Plato's been doing it, people have been doing it well for a long time. So we're in good company. So with that kind of throat clearing out of the way, if we'll go to the first slide, let's just start with a little bit about what's going on the ground in Ukraine right now. The Ukraine war has been a lesson in humility for me, as most things are. But, I was on a webinar here. I've lost all sense of space and time, but I think it was 6 to 8 weeks ago, saying I thought there was a 70% chance Russia was not going to invade Ukraine. They did. And then what happened after that was that I, along with much of the analytical community in the United States, did not think that Ukraine was going to be able to defend itself from Russia for that long. And that is not what has happened either. So this map is actually ISW's latest map on what the situation on the ground looks like in Ukraine. If you're looking for more up-to-date kind of things about what's going on the ground in Ukraine, ISW is an amazing resource. They publish almost daily updates and maps like these. So if you don't want to wait for me to tweet about something or get in touch with me, they're a good place if you're looking for more up-to-date impacts. And the thing that is shocking about this map is the blue. That denotes Russian retreats and Ukrainian counterattacks. And as you can see, most of the area around Kyiv, relatively safe. One of the reasons we are now seeing evidence of all these Russian war crimes and atrocities around Kyiv is because the Russians have pulled out. That is not all necessarily good. From Ukraine's perspective, what Russia's doing is it's moving all those troops to the red areas in the east, and it seems to be doubling down on the parts of Ukraine where it's been having a lot of success. So even though this is in some sense a small victory for Ukraine in a battle for Kyiv, the war is still ongoing, and it's still going to be very difficult for them to push Russia out from these eastern regions. But that, I think, leads nicely into sort of the first point I want to make here. And if we go to the next slide, it's that we shouldn't be thinking in terms of Russian strength with this war. We should be thinking in terms of Russian weakness. One of the reasons I didn't think Russia was going to do this is because, frankly, it's a stupid idea, invading Ukraine the way that they did. I feel even more vindicated saying that because I was speaking with one of my favorite Russian analysts just this morning on a podcast that is going to come out next week. And he said to me, I didn't think this was going to happen either. It didn't make a whole lot of sense. So when even Russian analysts, with all the propaganda that they're imbibing, are saying that sort of thing to you, you know it's going to be difficult. And you know it's going to be difficult because, first of all, Russia just does not have the capacity to conquer Ukraine. But the other problem is they have devoted so much of their strength to this war in Ukraine now that it is going to neglect other parts of its periphery. And Russia's not like the United States. They don't get islands on both sides and a friendly country to the north and a friendly country to the south, and everything is fine. The reason I always come back to this map with Russia is you realize just how insecure Russia's position is. So if you focus all of your efforts on Ukraine, you're basically ceding the South Caucasus. And there's a reason we've been seeing renewed fighting between Azerbaijan and Armenia in the South Caucasus Mountains. If Russia loses its position in the South Caucasus, the countries that normally project influence there are Turkey and Iran. I think sometimes we think of the Middle East as far away from Russia because it's far away from us. It's right on Russia's doorstep. And Russia also has a significant Muslim population. So if you get either Iran or Turkey or both competing in the South Caucasus, it opens up a whole can of worms that Russia's not ready to deal with. Ditto that with Central Asia. Remember, the year started off with Russia going into Kazakhstan and putting down a little political rebellion there. What has Kazakhstan been doing in the last week or two? Basically criticizing Russia for what it's doing in Ukraine. Even though Russia propped up that regime just a couple months ago, Kazakhstan is saying, we don't want to be associated with this. We're not super happy Russia is blocking some of our oil exports out. And then the real one here is China. Russia and China make a big deal about how friendly they are, but you have to understand that the only reason Russia and China are friendly right now is because the United States is treating them both basically as the biggest enemies to US foreign policy. I was speaking to some Chinese analysts and academics the other day, and I asked them, look, let's assume for a second that the United States was completely self-absorbed and preoccupied and wasn't doing anything. Let's take it off the map for a second. How would China be interacting with Russia? And they all said, well, that's a very different question. Like the reason we align with Russia right now is because of the way the United States treats us, and Russia is a counterbalance to the United States. If the United States is not going to treat us the way they are, we have no interest in supporting Russia. In some ways, we have divergent interests with Russia. So I say all that to say, what's happening in Ukraine right now is really depressing. It is going to get more depressing. The Russians are going to grind parts of that country into oblivion. I'm not in any way sanguine about what's going to happen there. But long term here for Russia, this is not an example of Russian strength. Russia's not going to go from Ukraine to the Baltics to Poland to all these other countries in Eastern Europe. It's going to be very hard for Russia to even sustain itself in the areas that are most important to it. So in some ways, what I'm worried about here from a geopolitical perspective is what happens if there's a power vacuum in the South Caucasus? What happens if there's a power vacuum in Central Asia, especially at the same time that we have rising fuel prices, rising energy prices, things like that. So that's one of the long-term real destabilizing effects. And that's going to happen over a period of years, not just sort of in the coming weeks. And I think Russia and the world has to be prepared for that, prepare for Russian weakness, not for Russian strength. If we go on to sort of the next map, this is just to nail this home. Again, we think of Russia as a monolith. It is not. This is a map of all the different ethnic groups that are within Russia. You don't have to know what all of them are. Most of this is in Russian anyway. It's from a Russian census in 2010. The important part is look at all the colors. You know, we think that Russia is a monolithic country. It is not. It is not just 100% Russian who are all Russian Orthodox Church, members who all live in Moscow, who all think Putin is doing great. Russia is a federation of a lot of different groups. And if the center cannot hold in Russia because it's overcommitted itself in a conflict like Ukraine, you could see things start to unravel there. We've already seen this movie before. It's what happened to the Soviet Union. They overextended themselves in Afghanistan. Boom, 10, 15 years later, the center wasn't able to hold and you had the whole system fall apart. So those are things to think about with Russia at a macro perspective going forward. Moving on to our next map, let's talk a little bit about Ukraine. Now, that might be confusing. I've just given you a map of 17th century or 18th century Poland. So how are we talking about Ukraine? This is probably going to be the most depressing part of this presentation because I think that Ukraine is facing much of what Poland has faced. And I really sympathize with the situation that the Ukrainian government faces right now, because on the one hand, they've defended their country so admirably and so passionately, but at the same time, the longer this war goes on, the more of Ukraine that gets destroyed, and the more Ukrainians who just leave the country. So over 4 million Ukrainians have already left the country. 6 million Ukrainians are displaced within the country, and probably more are going to leave as this war goes on, especially in the east. And the question is, will Ukraine be able to rebuild? And when I say that the Ukrainian government's in an impossible situation, I mean Zelensky has to decide, do I defend the glory and honor of Ukraine like I've been talking about, continue to do so, not give up an inch of territory, or do I try to sue for peace and stop the killing and let people go back to what they're doing and rebuild? And the other difficult thing for Zelensky there is he has no guarantee that Russia's not just going to lick its wounds and come back and do this again in 2 or 3 years. He certainly knows now that NATO is not going to help him directly in any conflict with Russia going forward. So the reason I have this map of the partition of Poland on is because this is exactly what happened to Poland in the 18th century. It was known as the Polish-Lithuanian Commonwealth. It was actually, for a period, the largest country in Europe. And it didn't just go away all at once. It happened in 3 different partitions, 1772, 1793, and 1795. And it wasn't just Russia. 3 different powers participated in carving up Poland for themselves. So Russia took a little bit, the Austro-Hungarian Empire took a little bit, and then Prussia took a little bit. This is all actually very personal for me because my grandparents were born in what was then Poland, what is today Ukraine. So like half of my family comes from this part of the world, and half of the reason I'm here sitting in front of you is because of the weird twists of fate that happened with these partitions. But we don't have to talk about that right now. The point I want to make, if we go to the next slide, is a very cynical one, which is Ukraine is also a very diverse country. You can see here, we've got a map of population density in the center, but then I've offset 4 different groups of populations within Ukraine itself. You've got the Russian ethnic population in Ukraine is the top right, Polish in the top left, Hungarian in the bottom left, and then Romanian in the bottom right. For years before this war started, Hungary was making noise about how Ukraine was treating Hungarians badly. Poland was making noise about how Ukrainians were treating Poles badly. All of these countries have long-standing land disputes with Ukraine and want some of these territories themselves. Hungary is the one that has been the most overt about it, to the extent that the Hungarian government even had to come out and deny this week that they had a secret deal with Putin to partition Ukraine. I don't think that they did. I'm also not establishing any moral equivalence here between Poland, Hungary, and Romania at all. I'm just trying to show you that within Ukraine, Ukraine is a very diverse country. And you can start to imagine scenarios where Ukraine does get carved up in a situation where it's just not going to exist as an independent country. That is not to say that Ukrainians are going to go away. Poland disappeared off the map for 150 years. It eventually came back, and Ukraine probably will come back at some point in the near future. But the depressing part of all of this is that Ukraine, as we know it, is probably not coming back. There's probably no scenario in which Humpty Dumpty gets put back together anytime soon. The flip side of this, of course, is that it was the partition of Poland that led to 100 years of peace and stability in Europe, because once those countries divided it up, they set down certain red lines, and until World War I, there was an 100-year period where Europe was relatively peaceful. So none of that means anything good for Ukraine. But as we think about how this conflict is going to evolve, this is one of the things that I think we should be watching. Let's stop with the depressing stuff and get to the next thing, which is the energy transition. This is from BP's Statistical Review of Energy. And I will send out these slides afterwards if you don't have them already. The thing that I really want to point on these slides about is look at all of the arrows that are coming out of Russia and look at what direction they're pointed in, especially the red ones. Those are pipelines, and that's telling you where Russia and in what direction Russia is going to be able to pipe its gas. Most of it is going to Europe. And there's going to be a race here in the next 2 or 3 years where I think Europe is going to be very serious about transitioning away from Russian energy. And Russia, for all the leverage that it has right now, and that leverage, I think, is what is keeping Europe from coming to Ukraine's defense in earnest and having some of these harsher sanctions on Russia, Russia cannot rebuild those pipelines to China quicker than I think Europe can detach itself from Russian energy imports. We'll just kind of very quickly breeze through the next slides, but this one is EU imports of oil from 2020 and 2021. You can see that Russia plays a major role here. The next one is going to be natural gas, and this is even larger. So this is another one of the reasons why Ukraine probably doesn't have a very rosy future, because Europe, even with everything that has happened, oil and natural gas are still crucial to their economy. But going forward, it's not going to be. And I think this is going to be a huge energy transition for Europe. Let's go to the next slide now and think a little bit more afield, which is Japan. This is a long-standing interest of ours at CI, and Rob's going to talk to you a little bit more at the end of this about how this is expressed. But I think one of the things that is going underneath the radar with this is that Japan is looking at this conflict and it's waking up, because it sees this conflict and it looks at China and it says, boy, we better get ready for what's coming, because the world that we existed in, it's not going to exist in like it is much longer. There are few, if any, countries that are more dependent on a global trading system than Japan, maybe Australia, but Australia is located far away from everyone else and doesn't have a lot of direct geopolitical threats. Japan is a remarkable country because it has become one of the top economies in the world, one of the most sophisticated economies in the world. And it really doesn't have a lot of its own resources. It imports a lot of its own food. So if globalization is receding and you're getting this multipolar world with rising spheres of influence, and you've got China on your doorstep, suddenly your access to all of these commodities that are crucial to your economy, it's not as cheap and it's certainly not as easy. And we are already seeing Japan change things. So in the global sit rep that's about to go out tomorrow for CI clients, one of the things that happened just this week is that the Japanese government is talking about increasing defense spending from 1% of GDP to 2% of GDP. Japanese GDP is really big, so that's a big deal. The amazing thing, though, about the reports about that was that it's not just to defend Japan, but that Japan is talking about doing that in order to defend Taiwan. So Japan is not only now thinking of defense in terms of itself, it's thinking about these other strategic areas within the region, and even ones that would bring it into direct conflict with China. Japan has a tendency to be very insular when times are good, which makes a lot of sense. But when times are bad and when Japan faces a serious challenge, it is able to marshal a level of political will that most countries in the world are not able to. And I would argue that we are on the precipice of that moment with Japan right now, and that the Russia-Ukraine war is the catalyst. That is the thing that decision makers in Tokyo are talking about, and it is changing both their views and the views of Japanese people on the ground. If we go on to our next slide, making sure I remember where I am. Yes, so the next slide I want to talk about, this is not something that most people are, I should say, a lot of people are thinking about the future of Europe. We are thinking about the future of Europe much differently. I think everybody else is looking at rising inflation rates and Europe's dependence on Russian energy and saying, oh my God, Europe's not going to be doing very well. You've seen the euro decline against the dollar on that kind of trade. But I think that's actually wrong. And I put up this chart because just look at where European GDP was before the 2008 financial crisis and where it is kind of stalled out here in the last 12 to 14 years. For a moment there, the European Union's economy was larger than that of the United States. You probably didn't hear about that because everybody was freaking out about China. But that's the level of economy that the European Union has. And one of the big catalysts of this Russia-Ukraine war is that I think it is going to bring the European Union much closer together. The two biggest problem childs in the European Union, if you'll forgive, I don't have a better way to say it, were Poland and Hungary. Poland is the much more important of those two countries because Poland, besides Ukraine, is the largest country in Eastern Europe. It's the largest EU country in Eastern Europe. And if Poland's not going to go along with Hungary's Euroscepticism anymore, Hungary is just kind of sitting out there by itself, completely isolated, and it's probably going to be made an example of by Brussels. So again, if you look through what's happening this week, you've already had the European Commission come out and say, all right, we're going after Hungary's EU funds after Viktor Orban's election. So I think one of the things we're going to see here is not a weakening European Union. We may see some difficulties in the European Union markets themselves for the next year or two, but that is going to be useful disruption. It is something that is going to bring the European Union together, and I think is going to send the EU on this chart upwards more, and especially when it, in terms of energy, in terms of manufacturing, in terms of defense spending, all of those are areas in which Europe is going to outperform the rest of the world here in the next 3 to 5 years. The next thing I want to talk about is the global food crisis that is emerging. And I've been banging on the table about this for literally 2 years now. Those of you who even started with me when I started putting out that COVID update right when it started, and I had just left GPF and I hadn't even launched Perch yet, let alone met Rob and started working with the CI guys and girls. I've been talking about food prices for a long time now. And the thing to understand about this Russia-Ukraine war is that it has exacerbated a situation that was already at record highs. So we already had food prices that were at record highs, according to the UN, in January and February. And then you lace this war in, And you look at this really useful graphic of where Russia and Ukraine export a lot of their wheat and corn to, and you start to understand, we are sitting on another Arab Spring. The reason the Arab Spring comparison, though, isn't a very good one is because the Arab Spring was really it was a very localized affair. It happened because there was a major drought in Syria and Iraq, and that disrupted food supplies for a lot of North Africa and the Middle East, which is why you had things kick off in Tunisia, in Egypt, and in other parts of the Gulf. We're talking about a sort of global Arab Spring type situation right now. And as you can see on the list of countries there on the right, we're talking about countries like Egypt, Turkey, but then also Nigeria, Bangladesh, Senegal, Vietnam, Indonesia. We're all around the world here. We are going to experience higher prices in the West when it comes to food, but a lot of these countries are going to experience real food shortages and political instability as a result. We see that on the next slide. This is a list of countries, this is a map of countries that import a lot of wheat. So the darker the color, so red should be, very concerning. And then the yellows and greens are also very concerning. So these are all countries to have on your watch list. And I wanted to put this here because it's not just the countries that import from Russia and Ukraine that we have to worry about. It's all of the food insecure countries in the world who depend on exports. Because when you take Russia and Ukraine off the market, what you're doing is you're increasing competition and prices from everybody else. And there's sort of a scramble for all those other things. So to really drive this point home and to point out two things that have happened just this week, if we go to the next slide, this is where Peru imports its corn from. So Peru is a pretty significant corn importer. Look, there's no Russia or Ukraine at all. They literally 0 bushels of corn for Peru from Russia or Ukraine. It imports mostly from the United States and then, Brazil, a lot from Argentina, a little bit from France, as you can see on the map, and some Mexico. But what's happened this week? Peru has had a breakout of political instability. It started with rising food prices and protests over rising food prices, and that has escalated into Pedro Castillo, the president of Peru, declaring a state of emergency, deploying the military throughout the country. There have already been some deaths among the protests there as well. I was just talking to a contact in Peru about this yesterday, and he says the situation is very bad, and it doesn't seem like there are a lot of off-ramps. And you can trace that all back to rising food prices. And again, it has nothing to do with Russia and Ukraine. Peru doesn't import from Russia and Ukraine, but when you take Russia and Ukraine off the board, suddenly that affects indirectly a country like Peru. Another example of this, if we go to the next slide, and this is an example of a country that does import from Russia and Ukraine, is Pakistan. So Pakistan's prime minister, the great cricketer Imran Khan, if you have any, we probably don't have any cricket fans here. I think we're all civilized basketball fans, hopefully. But Pakistan imports a lot of its food, and they have had a government collapse here in the last week. Pakistan's a country of over 100 million people, and they have nuclear weapons. And their prime minister tried to dissolve parliament. The Supreme Court said, no, thank you. And this is also a country with a history of military coups. So again, this all started with protests over rising food prices in Pakistan, and that's already beginning to mushroom outwards. So these are things I think that are going under the radar. And I think this food crisis, it's really a 2 to 3 year story. And we're going to have to watch how it evolves in emerging markets that are vulnerable. We also at CI are very, very closely watching really mundane things like what is the yield in corn for the United States for the upcoming growing season? Is Canada's drought going to resolve itself? Is the Southern Cone going to resolve its drought? Kind of looks like not. It seems like we're actually now getting colder weather after a big drought in South America. So these are some of the things to watch out for. And just like the Arab Spring transformed the Middle East, it's not even possible to really say specifically how this is going to change the world, but it already is changing things in the world, and it's going to much more in the future. Our next thing, and again, that got a little depressing, so let's get a little less depressing here for a second. This is, I think that we should think about what's happening in terms of supply chains as a real opportunity rather than as a threat. And the example or the thing that I've been thinking about, or the idea I've been toying with here, is comparing the US mining industry today to the shale industry in the late 2000s. The shale industry was largely criticized. You probably remember all the protests about fracking and things like that were in the US at the time. I remember I was in college at the time and everybody hated fracking. I was up in upstate New York and there were all these protests and things like that. But then suddenly fracking worked and the US became a major oil exporter and a natural gas exporter and all these other things. And it actually has done very well for the United States. It's one of the reasons the United States is not facing a similar kind of set of economic disruption as Europe is right now, because Europe is so dependent on Russia. The United States not dependent on anyone anymore, not even the Saudis. Like, yes, they can drive up the price, but the US is an energy producer because of fracking. I think we're in that sort of moment here for the US mining industry over the next 5 to 10 years. The logic of globalization was we didn't want to do mining in the United States for a lot of very good reasons. It's very expensive. It can be very pollutive. It's the type of stuff that you want to outsource to other countries. And that's what the United States has done. This is from the US Geological Survey. It shows you countries that we import a lot of important mineral commodities from. And you can see China's in red, Brazil's in orange, India's in orange. We have farmed out a lot of these mineral commodities to these countries because A, we don't have to do it at home, and B, it was cheaper to do so. And the problem is that only works in a globalized world where we have a lot of free trade, where everybody trusts each other, where there aren't trade wars, where there aren't geopolitical conflicts popping up all over the place. So I think the United States really means it when it says it is going to fix this foreign dependence on mineral commodities. And I think you're going to see a rebirth of mining in the United States or in countries that are closer to the United States, and a lot of government subsidies there. And I think it'll be much like the shale industry was, criticized endlessly. The ESG crowd is going to hate it for a lot of different reasons until suddenly they won't, because we'll be the ones that are sourcing a lot of these mineral commodities that are important for everything from our cars to those same ESG technologies that we want to use to reduce emissions. If we go to the next slide, this is really small. This is just to make a point. We can send you the full survey if you want. This is a list of important mineral commodities that the U.S. imports. The bar chart there is to tell you how much of our dependence is on imports, and then the right is the countries that we import from. I mean, look at all the blue. There's like a list of at least 10 different minerals there that we don't produce any of it ourselves. We're importing from countries like China, like Ukraine, like Russia, even in some of these commodities. That's not going to continue going forward. If you go to the next slide, yes, and one of the, I forgot where I was for a second, but one of the case studies I wanted to talk about, and I think one of the most interesting things here was nickel. This map shows you countries that export a lot of nickel. The United States is actually currently a fairly large exporter of nickel, so is Canada. But as you can see, Russia is also a big one, and Russia is actually the largest. And Russia has been causing a lot of problems in global nickel markets, which have been having a lot of troubles in general already. I bring all this up because Cuba is a country that has plenty of nickel reserves. Rob and I were just talking when we were preparing for this presentation, and he asked me if Cuba had cobalt reserves as well. And I said, no, I don't think Cuba has any cobalt reserves. And I was actually wrong. I looked it up right beforehand, and Cuba has a lot of cobalt as well. So one of the things to think about here is that the US, it's not just going to be US mining. The US is going to be looking for different countries around the world that it can source some of these types of materials from. And I think one of the things that means is that politically, a lot of these anachronistic conflicts, like conflicts with Venezuela, like with Cuba, like even with North Korea and Iran, those are not going to be able to stay in place. The United States doesn't have the luxury of those things anymore. So if you can imagine the United States being able to source a lot of its nickel or a lot of its cobalt from a place like Cuba, that becomes a very interesting and I think compelling economic case for changing political relations with that country. Maybe this Russia-Ukraine war will give us the impetus to changing some of those policies. If we go to the next slide, again, this is just to show you, to underscore what I'm talking about here. These are reserves for nickel around the world. And you can see that Cuba has a lot of nickel reserves. Australia does as well, Brazil does as well, but then you've got Indonesia, Russia, all these other countries that are competing. So when you start thinking about where mining is going to go forward, you want to identify some of these critically strategic commodities and materials, work out what are the few countries that have those materials and what their political affiliations are and how things are going to move forward. And when you look at this list, it's pretty clear to me that some of US relationships are going to change here, and that countries like Cuba, like Brazil, like even Indonesia, the Dominican Republic, these are countries that are going to become more important to US foreign policy and that we're probably going to be hearing a lot more of. And that kind of disruption usually creates investment opportunities as well. If we go to our next slide here, this again is just a list of critical minerals from the US government. The Trump administration started this in 2018 with 35 minerals. The Biden administration has added another 50. So that's the full list. And I think Rob will talk a little bit more about some of the ways we're kicking the tires on this. But this is a huge list to shoot at. So I just talked about nickel and Cuba, but every one of these minerals that is on this list is a mineral that the United States needs to source from somewhere. And there's probably going to be disruptions in these industries, and disruption in this case means a lot of opportunity. The last thing I want to put on, and I guess we'll end with the depressing thing, is the idea of nuclear proliferation. And this is not just nuclear weapons. This is also going to have implications for nuclear power as well. But this is where estimated global nuclear warhead inventories are right now. You probably all know that the United States and Russia and France and the UK, China are nuclear powers. But the thing that I want to point your attention to on this list is the countries that have developed nuclear weapons over the past couple of decades that have not been technically allowed to have them. So Israel, Pakistan, India, and North Korea. Our global attempts at nuclear proliferation have really failed. And that was in a world where globalization was doing well, where it was a unipolar era, where there was a lot less geopolitical instability. And I think one of the lessons that countries around the world are going to use from the Russia-Ukraine war is this understanding that nobody's going to protect you if you can't protect yourself. So it is too late for Ukraine right now, but I guarantee you that there's a whole list of middle powers in the world right now that are thinking about, should we acquire nuclear weapons? Is that the kind of deterrent that we need in order to prevent a Ukraine type situation happening to us? So countries on this list would be countries like Saudi Arabia, Japan, South Korea, Turkey. Building a nuclear industry from scratch is really, really hard. It also requires a lot of investment. It changes everything from energy markets to investment in technology. All these sorts of things change around nuclear. So I think one of the things to think about going forward as a result of the Russia-Ukraine war is, what does this map look like in 10 years? And how is nuclear power going to be alongside this? Is this just going to be an arms race, which is kind of one investment thesis on its own? Or are we going to be talking about a much wider purview for nuclear in the future, where both power and weapons become things that participate next to each other? So I'm pretty sure that was my last slide. And I will hand it over to Rob now to start talking through some of the investment implications. But just to say again, and to emphasize, this is a blue sky type exercise. So I'm not ready to establish probabilities for any of these scenarios. My goal here is to lay down all of the possible. And once we have the possible, we can start creating investment theses or talking about how to falsify things, this, that, and the other. And in that sense, I would invite all of you who are part of CI's knowledge platform to critique these, to share your thoughts with me or with Rob, either on the Slack or via email, all the different ways you have to reach out to us. Because this type of exercise goes on and on and on. It's not like, oh, we have the perfect roadmap and then we go from there. It's that together with the power of all of our brains, we figure out what's happening in the world and we figure out how to translate that into success. So with that, I will be quiet and hand it over to Rob to talk about some of the direct investment implications.
Sure, thanks, Jacob. So a few points to make with regard to investing, and particularly macro investing. So you can see there's a quote here from the legendary macro investor, Bruce Kovner, where he talks about being able to imagine future scenarios that are truly different from today. And that's an undervalued skill, because psychologically, we all have anchoring bias. We all tend to look at the world as it is today and overstate the probability that that's going to remain the case. The interesting thing about the current environment in particular is, and this is something that we talk about internally a lot, is we think in the midst of a volatility spiral, so to speak. So in financial markets, when we talk about volatility, one of the key things about volatility is that it clusters together. So volatility begets more volatility. When things become more volatile and uncertain, You get actors in the market acting in ways that are more aggressive, and that increases the volatility of the whole system. So a lot of the things that Jacob's speaking about geopolitically, who could have imagined these things 5 years ago, 10 years ago, never mind 20 years ago? But this is what a volatility spiral looks like, whether you're talking about geopolitics or talking about financial markets, which in many ways are a mirror of geopolitics. So the way that we approach this blue sky thinking and trying to identify future scenarios and how to position for them is to lay out a clean slate and really try to pull our heads out of what is the current status quo and what could reasonably happen in the future. So with that said, here are 5 different opportunities that we're looking at and thinking about and evaluating at different levels. Some of these are more actionable than others, but I would say that all of these can be classified as unthinkable scenarios. I don't think many other investors or market participants are thinking very closely about any of these things, which in itself is very interesting. And we'll talk about each of them in turn very briefly and how we conceptualize it and how we're approaching it. So the first one is Cuba. Jacob mentioned the issue of Cuba and its nickel deposits, its cobalt deposits. This has been a big theme for us that we've been writing about in the Global Situation Report for a few years now, is what happens to tip over the equilibrium where Cuba comes in from the cold. If you look at Cuba's fundamentals, it's very, very positive. Cuba is right next to Florida. It's an hour plane ride away. It's huge, it's beautiful. It's remarkably well off given how closed it is to the rest of the world, which is surprising. And if you really dig into it, you can see why, and it reveals some of the latent opportunities there. Whoops. So you can see here, this is showing tourism GDP per capita, and even relative to other similarly situated countries in the area like the Dominican or Jamaica, Cuba's tourism GDP is teeny, tiny, never mind related to Florida or a more developed area. And yet at the same time, Cuba's human capital is enormous. So this shows the United Nations Human Development Index for education. And it's shocking to see that Cuba is at European levels of education. This is a very well-educated country. People there have remarkably good skills relative to the income per capita. So we look at these things and we don't have a specific way to play this right now. There's no stock market in Cuba, obviously, but it's something that we're thinking about very closely because, as Jacob pointed out, the position of the US toward these former pariah countries is going to have to change, and it is changing. And there have been some signs of a warming of relations between Cuba and the United States over the last 2 years. This is something we're watching very carefully, and it's being accelerated by this Russia-Ukraine conflict. The second thing is Italy and Japan, which seemingly are very, very different places. And just to frame the conversation around these two, I just want to bring up this chart, which shows the wealth to GDP ratio. And you can see Italy, shockingly, is the second wealthiest country relative to the amount of GDP it has, right after Hong Kong, which is a city-state in a very different situation. And Japan is number 11. And why do I bring this up? Because both of these countries are remarkably wealthy places, and they're sitting on a massive amount of capital that's being unused. And if you look at Italy and Japan, which from a GDP standpoint have stagnated for a very long time, In many ways, the stagnation is driven by the lack of investment. And there have not been sort of the impetus to invest that you see in other similarly placed countries. And if you look at both of these, here's Japan and here's Italy. Here's the stock market of Japan going back to the 1970s. And you can see this was the Heisei bubble in 1989, back when Japan was on top of the world. And since then, we've been in a 30-year malaise. And technically, the thing that catches our eye here is that just under the recent COVID environment, the Japanese Topics Index has broken out above this long-term area of resistance that held throughout all of the 1990s through 2007, 2015, and then bam, we've finally broken out here. And why do I bring this up? One of the key things that we believe at CI is in combining different disciplines together. And somewhere in the synthesis of those disciplines lies the truth. So this is technical analysis. And the idea of technical analysis is ignoring what's going on fundamentally and just looking at price action. But it's really uncanny when you look at the behavior of markets and how it seems to match up in many ways with the story that Jacob is telling. After the COVID period, as global supply chains really started to come apart, as global cooperation and trade flows really started to come apart, all of a sudden you get this really noteworthy bursting above former resistance in Japan. So our view on Japan in particular is that the market is telling us something. The market's telling us that some scenario, some equilibrium that has held for the last 30 years is now starting to change. And we look at this and we look at the opportunities in Japan where valuations are very, very low, where the expectations are very, very low. And we get very, very bullish on Japanese equities. And right now we're expressing this in CI macro. We have a significant position in Japanese stocks. Likewise, Italy, we have a position that we've recently started to rebuild. But the chart of the Italian stock market is very similar to Japan. So this is going back to the mid-90s. You can see during the sort of peripheral EU bubble period of the mid-2000s, Italy was a real screamer. And since then, in the post-2008 financial crisis period, it's been just completely dead money. And yet, look at what's happened recently. During the same period that Japan broke out of its 30-year trading range, Italy has also recently broken above this extremely important level that's been meaningful going back to the mid-90s. So we have this really noteworthy breakout happening here. So what could the market be telling us in both of these scenarios? Jacob spoke about the consolidation of the EU. What is the EU doing in response to Russia, Ukraine? And these are trends that have been in place for years now that we've been talking about and writing about. But our view is that this is being accelerated. And if I had to put it briefly, what combines or what connects Japan and Italy, seemingly very different places, it would be that they're both beneficiaries of fear. So if you look at the European Union, it has stagnated because the different interest groups within the EU have been unable to agree. There's a lack of a common vision. Fear focuses minds. Similarly for Japan, historically, Japan has always done best when it's been threatened. And Jacob had a very nice deep dive piece in the Global Situation Report a few weeks ago on Japan and discussing the fact that it's an archipelago it's very difficult to unify Japan and get everyone rowing in the same direction. And throughout most of history, it was never unified. But it was only when Japan started to feel the outside pressures that the nation found a true sense of purpose, came together, and did very extraordinary things to modernize its economy, accelerate its rate of investment. We see similar shades of that today, both in the EU, as shown by Italy, and in Japan. So moving on, we talked about Cuba, we talked about Italy and Japan. Italy and Japan, we can express through public markets. The fourth thing is US mining. I'll just speak very briefly on this because it's fairly self-explanatory. But one of the ways that we're looking to express this is through private investments. So we have a small strategy for private investing. And right now we're kicking the tires on an opportunity that we discovered through our network in a mining opportunity in the Southwest United States that's primarily related to gold, but also has exposure to a lot of the minerals that were on the list that Jacob presented before as being of significant national security importance. Finally, Iran. So this is one that's very much in the Cuba camp, where you can't really express a bullish view on Iran very easily in the public markets or in the private markets for that matter. Nevertheless, you have to be thinking about it. Iran is desperately poor. And if you look at their position historically, this is a great civilization. It has significant human capital. And it's, as Jacob pointed out, it's been a pariah state for 50, 60 years now. That's unlikely to last. And when that changes is not entirely clear, but the latent potential within Iran, we think is enormous. So there's nothing to do right now with Iran, but you want to be thinking about this. You want to be looking for opportunities at the margin that others are not paying attention to. Because if this turns, it could turn very quick. And just for example, if you look, when I talk about looking for latent opportunities, the largest cell phone carrier in Africa is called MTN, and they have a 50% stake in the monopoly telecom business in Iran called Iran Cell. So that's not even on their balance sheet because it's a joint venture. But things like that you want to be looking out for, and certainly we're looking out for it. And I'm not recommending MTN as an investment to make right now, and we're not invested in it. But you want to be starting to look around the margins and see where these opportunities in Iran could be, because it's being completely ignored by the majority of investors right now. So that's it for my portion of the presentation. Jacob, we already have some questions in here. Just as a reminder, if you want to ask a question, there's a button at the bottom of your screen that says Q&A. You can type on that and click in the box to enter your question in there. So here's a question for you, Jacob. Curious to see where you see US LNG prices heading in the next 2, 5, and 10 years. Do you have a view on that?
Great question. 2 years up, 5 years probably still up, 10 years low. The more complicated answer to that question is that I think we're in an inflationary environment for energy in general for the next couple of years, and that's going to be visited most heavily on natural gas, on coal, and on oil. And the reason is that we're in a real paradigm shift here, where the world is trying to move towards renewables and is moving towards renewables. If you look at growth in renewables, it is increasing admirably in a way that it hasn't before, but growth hasn't scaled yet. So we're not even having enough renewable capacity come online to meet growth in energy demand, let alone eat into previous energy demand as well. That will change probably in the next, I would call it 7 to 10 years. If you want to be really aggressive, maybe you could say 5 years, but it's not going to happen in the next 2 to 5. So I think, unfortunately, we're going to see very high energy prices here for the next couple of years. And all it takes is one particularly cold winter or one particularly bad storm in the United States. We had Ida last year, which knocked out a lot of U.S. energy production. Harvey, a couple of years before that, did that sort of thing. So if you have that sort of storm in this environment, you can start to imagine really, really high energy prices. But overall, once we get to the end of the decade, I think probably you're seeing a lot of deflationary impact with energy prices. So short term, higher prices for LNG. Long term, though, expect to see those prices come down as renewables finally start to scale.
And we have another question that was submitted in advance, Jacob. You spoke about the weakness of Russia and sort of power vacuums in Central Asia and the potential risks around that. What do you see as potential countries that could benefit from these power vacuums? Are there any feel-good stories in that region, or is it just chaos and doom and gloom on the horizon?
Well, I would say the first place that we're really looking is on the periphery, so not in that Eurasian heartland. So kind of like, for instance, Chile is a country that CI is investing in right now. One of the reasons Chile is so great is because it's far away from any of this geopolitical chaos. Brazil is another example. You want, I think one of the prototypes for a country that does well in this macro environment is a country that is away from these things, that has resources, that is able to kind of do things on that score. I'm not particularly enthused about the South Caucasus, and I'm not particularly enthused by the Balkans either. I think there's more instability to be had than opportunity, and the disruption is almost too much. The interesting one to me is Central Asia. And that could really go either way. Central Asia has a lot of things not going for it. I could make a case that the epicenter of the global food crisis coming up is going to be Central Asia. These are countries that import a lot of food. There's a lot of water stress. They are old Soviet-style dictatorships still. If you haven't looked up Turkmenistan and what its leaders like to do on the weekends, that's a really, really fun time on YouTube if you're bored. And they've been keeping, Islam there down. It's very secularized. So even though people are Muslim by identity, the governments have been enforcing secularism from that kind of authoritarian perspective. So there's all these problems with Central Asia. That said, there are also some advantages there. The demographics are very favorable. One of the last trips I did before the pandemic broke out was in Uzbekistan, which their old dictator died, and you had a new leader come in who is still very much a dictator, but was starting to liberalize some things, and he was comfortable letting people express Islam in public. He was trying to liberalize cotton markets in Uzbekistan as a way of maybe liberalizing all of Uzbekistan's agricultural trade. You had him also trying to restore some relations with some of the surrounding countries. And the other thing about Central Asia is you've got so many countries around it that are interested in it. So it's not just Russia, you've got South Korea and India and China. There are a lot of investment dollars that are going into that. And if you can connect Central Asia in that way and help connect Europe and Asia together, there may be some opportunities there. It's for the brave of heart. I think it's way too early, but of kind of the Russian peripheral areas, that's the one that I think is most interesting. And all Uzbekistan, Kazakhstan, those are some of the countries that I would look for. But again, I think the real opportunities are more on what are called the rimland, or even in sort of on the periphery, because right now I think Eurasia is gearing up for a lot more instability.
Turning over to Cuba, can you speak to the political situation right now, Jacob, as far as reconciliation or any sort of normalization of relations between Cuba and the US? Is that on the potential horizon, or what are the key things to watch?
Yeah, so it's not on the horizon right now. For folks who don't follow this very closely, there's two ways to answer this question. There's the situation in Cuba itself, and then there's the US relationship with Cuba. Cuba itself, last July, had the most significant anti-government protests there in a generation. And they were really grassroots protests that came out of nowhere. Nobody expected them. And the Cuban government has really cracked down on them pretty hard. Now, you can look at that as, oh, this is just Cuba again, subjugating its people, this authoritarian government and the Cuban Communist Party. Nothing has really changed. But I think those protests last year were a big signpost for something changing in Cuba. The Castros are gone. You've had a sort of leadership change. You've got the Cuban Communist Party looking around and realizing they need to modernize to a certain extent if they're going to stay relevant. So that to me is actually a positive sign of disruption. It has not been met by the United States with any sort of interest. And I think that unfortunately just boils down to US domestic politics. We are in a very polarized political environment in the United States. Florida is a major country when it comes to national elections. And Florida has a lot of Cuban refugees who fled the Cuban regime and for very understandable reasons want nothing to do with Cuba and want the United States to be as tough on Cuba as possible. And nobody who's running for president in the United States can afford to lose Florida right now or upset those people. So even though Biden was part of an Obama administration that really took some serious steps towards normalizing ties with Cuba, the Trump administration reversed those, and Biden has not been willing to go back to the Obama era relationship with Cuba, even though he's made Latin America and Central America in general such an important part of his foreign policy. So I think the things to look at from the US perspective is we're going to have to get through some of this political polarization internally and not have Cuba be hostage to our domestic politics so intensely as it is right now to see a change in US foreign policy. But I think that's a matter of time. Now, that's been a matter of time for decades now. Like US foreign policy towards Cuba has not made sense for literally decades. But I think one of the things we're talking about here is this Russia-Ukraine war is a catalyst for change. And the United States in some ways had the luxury of treating Cuba the way that it did because it didn't have bigger pressing problems. It wasn't facing off in a global trade war with China, from whom it's sourcing a lot of its important mineral commodities. So I think we will see, I think even in the foreign policy community, there is already space there. But for the US to take that next step with Cuba, it's much more about domestic politics and whether we can get past some of our domestic problems in the US and think more strategically long term.
Okay, so we have one question on Central Asia again. Can IS, what is ISK?
I would assume, is it ISIS?
ISIS, maybe?
Or
Can
ISK?
ISIS, can they take advantage of the conflict in a meaningful way in the post, yeah, it must be ISIS, in the post-Soviet Asian republics? So,
yeah, I mean, this is,
yeah.
this is one of the negative things about Central Asia. It's one of the reasons to stay away because it has the profile of the Middle East before the Arab Spring. Remember, the Middle East before the Arab Spring, you had a lot of dictators who didn't like Islam at all and who made these republics very secular because they were threatened by Islam as the only other political force that could resist them. That is definitely something you could see in Central Asia. I will say, though, two things that Central Asia has going for it. Number one, these governments don't want any part of it. And they have been very, very careful about it. And you've had generations grow up in that kind of secular environment. The second is that historically, these are not radical areas, at least from an Islamic perspective. This was all, I mean, you mentioned Iran. This was all Iran's sphere of influence back in the day. And Iranian culture and Iranian language is still a lot of what defines this. And notwithstanding what's happened in Iran since the revolution there and this theocracy that's governing there now, Iran actually has a much more kind of open, philosophical, mystical approach to Islam than a lot of others have. So ISIS can and probably definitely will try to take advantage of what's going on in Central Asia, but they've been trying for over a decade now and have had little success. The place where ISIS and groups like ISIS are having success right now are in Western Africa, are in Eastern Africa. So Mozambique is one country that we've been talking about, Rob, for a long time. There are also reports about what's going on in Western Africa with places like Mali, Niger, Nigeria. These are places where Islamism seems to be most politically threatening right now. Central Asia is certainly a place to watch for on that list, but it just hasn't taken yet. And that you might say is a good sign for Central Asia going forward.
Okay, so we have two questions on a similar topic. So Japan and Italy, how do we take into account their poor demographics and stagnant to declining populations? So I guess I'll take that one. I think it's probably more relevant. There's really two ways to answer that question. The first one is, at the very high level, demographics is not destiny. So there's a really wonderful book by Benjamin Friedman where he goes through different eras within the United States and other developed countries like France, and looks at periods where population growth really slowed down, where real incomes slowed down, where you had an economic malaise, and demonstrated how these things tend to combine into one kind of negative feedback loop. And then it changes and the birth rates improve and people's outlooks on the future improve. And he goes through all sorts of kind of social indicators, views of the future, substance abuse, all sorts of things demonstrating how people view the future, how people are preparing for the future, and shows how you go through these cycles. So just because Japan and Italy's birth rates are very low now does not mean that that's going to change. Demographics is not destiny at the very high level. And as a similar point, I think the demographics issue is so well understood now, and it's so well telegraphed. I mean, it's the first thing. I mean, we just got 2 questions on that issue. It's the first thing that everyone thinks of, which is really revealing because we're dealing in both of these cases with public markets. So we're looking through the prism of expectations and valuations. And if you look at a country like Japan, Japan's total stock market is about 0.8 times the size of its economy. And if you look at the US, it's about 1.45. So what does that tell you? It tells you that the implied expectations for Japan are hugely negative relative to the US. And the US demographics aren't much better than Japan. So I think a lot of that is priced in, even to the extent that, as we said, it's not necessarily set in stone. The other and potentially more relevant thing in the short term is we're primarily bullish on both of these countries, not because of a demographic turnaround, but because you can very easily get improving GDP per capita. And in fact, that's what we would expect here. So when you look at the investment opportunities for Japan and Italy, it's not necessarily in expanding their capacity, because the problem with demographics is traditionally when the population is not expanding anymore, you lose the initiative to expand capacity, to build the capability to produce more stuff, because you just don't have the people to consume it unless you're an exporting country, which in Japan's case it very much is. The opportunity for Japan and for Italy in particular is not necessarily in expanding capacity, but in upgrading their capacity. So I saw a really shocking stat just last week that stuck out for me, which was only 78% of Italian adults ever use the internet at all, which when you think about what that means, I mean, the opportunities there are pretty significant in terms of upgrading technology, not only what we think of as technology in terms of information technology, but also simple things like energy. You hear these stories of people going to Japanese office buildings and the HVAC systems are from 1971. This is low-hanging fruit, and it's been laying dormant for a long time. And that doesn't require population growth. It just requires consistent and sustained investment in upgrading the existing capital stock to better position them and protect them for the future. Another question, as we move forward to lower emissions in the future, do you think it will directly influence commodity demand, knowing the carbon footprint that the mining industry contributes economically? Do you want to start with that one, Jacob, and then maybe I'll jump in?
Sure. I'm reminded of what our friend Spiro, you told me our friend Spiro says, which is never short fat people. I also wouldn't short people's demand for things because they think that their carbon footprint is in any way important. Yes, this is something that people say a lot, but like concerns about carbon footprint are not going to change demand for commodities at all. The more interesting thing, so the first answer to your question is no, I don't think it's going to reduce demand. What I do think it's going to do is we are going to see moves towards technology that is more green, that is more sustainable, even in these extractive industries. So imagine, for instance, like there are certain things you're just going to have to mine out of the earth: cobalt, nickel. There's no kind of alternative for these anytime soon. You're going to have to extract them from the earth. But you could power the fleet of trucks that hauls this stuff with hydrogen rather than with oil or natural gas. You could have vast increases or improvements in the way that some of these commodities are mined from an environmental perspective. One of the reasons that China has become the center of rare earths refining in the world is because they're just willing to do it cheaper than everybody else, because they didn't care about the environmental consequences. You can refine it in a more environmentally friendly way if you're willing to spend more money to do so. So probably there's going to be a lot of investment in technology to make that process more green. So I don't see humans reducing their demand unless something really catastrophic happens in climate that nobody's predicting sort of in a short time horizon. I think more likely though is, and this is, when you get to the conversation about mining, sometimes it's not just about mining. Sometimes it's about, okay, well, who's investing in technology that makes it easier to mine, or who's making it so that you can reduce emissions but still extract the things that you need in as sustainable a way possible. That I think is going to happen, but I wouldn't expect a decrease in demand for a lot of these commodities. If anything, that demand is going to increase, and makes the importance of finding better ways to mine them and more efficient ways to mine them all the more important.
Great. Well, I think it looks like that's the end of the questions, and we're over the hour mark. So why don't we wrap it up there? Thank you everyone for attending. Jacob, thanks so much for taking the time. And if you have any follow-up questions, please feel free to email either or both of us. Our emails are just rob@cognitive.investments or jacob@cognitive.investments. And we'll see you soon.
Cheers.